So since I've started investing in these companies, bringing you along on my stock investment journey, I've been getting loads of questions on Instagram from people asking me what app I'm using to trade, how much money I've put into it, what companies I think are the best to invest in, and everything along those lines. And I feel almost like I have to make a video speaking about why you shouldn't or why you should get into the market, because it's definitely not for everyone, and I don't want people to start investing just because I am. So today we're going to speak about why you potentially should or should not get into stock investing. It's important to know that in all of my videos, everything I speak about are just my own thoughts or opinions. I'm not a professional, I'm not a financial advisor or anything along those lines. I've said it before, I'm just a random 22-year-old kid on the internet who enjoys investing in stocks. So don't just take my word for anything, always seek out more information. There's only one thing I talk about on this channel that is definite, and that is that you should smash the like button. Yeah, it had to come eventually. And subscribe, baby, subscribe to the channel so you never miss a video. Really, I think a lot of people start investing for the wrong reasons. They just see that people make loads of money and it looks exciting, especially now with the world that we're living in. So let's talk a little bit more about why you should or should not invest. So the first point I want to make is, are you okay with investing money on a weekly or monthly basis and not touching it for decades to come? Because that's what long-term stock investing is. When I put my money aside, I don't plan on touching it for decades, 30, 40, 50 years. Until I retire, that's essentially when I want to touch this money. Until then, I just forget about it. So as soon as that money goes into account, are you okay with potentially never touching it again? If you're the kind of person who just wants to, put a large sum of money on one company and hope that they have one good day and they go up by 50% and you take out your money, that is not what stock investing is. You may as well just go to the casino, because all you are doing is gambling. When I invest in a company, I do my research and I ask myself, do I believe in this company over the next 30, 40, 50 years? Not do I believe that they're going to have a good 3 or 6 months. It's very long term. I pick companies that I think will be around for generations to come and that will do very well and will lead their particular industries. It's not a short term thing at all. If you would prefer to be a short term investor, there's different routes you can go down. One that I'm also going down is real estate, or getting onto the property ladder. So like, most people could save aggressively for a year or two and save up enough to get a mortgage on a house of some sort that somebody would be happy to live in, and that's only a 1 to 2 year investment. You know what I mean? So you're going to invest your money, get a mortgage, and then somebody else is going to pay that mortgage and pay you something. So if you're not comfortable with leaving your money for that long, that could be a good line to go down potentially. Personally, I just think that if you plan on investing in the stock market and taking your money out in 1, 2 or 3 months, it's close to gambling. That is really the way I would look at it, because anything can happen in 1, 2 or 3 months. You know what I mean? If you started a month ago, you would be down 30, 40% more than likely on your investment. So I just don't see it as being a good place for short-term investors. Now, point number 2, will you be able to invest and, more importantly, stay invested without letting your emotions take over? So inevitably, times will come, especially if you're investing for decades like I will, where you will see your money going down and down and down. You'll see your portfolio going down and down and down, like what's happening right now. I'm down, I think, 18% or so right now. Are you going to be okay with losing money in the short term, or are you going to be the kind of person who goes, you know what, this could keep going lower, I'm going to sell everything? There's a very popular saying that you only lose when you sell. Okay, now this, I don't completely agree with this statement, but the point stands. If I was to sell all of my stocks now, I would have lost close to €500. But if I hold on to them, which is what I will be doing, at some stage they're going to go back up and they're all going to be in the green, hopefully, and they will have made me money. So you only lose money when you sell. That's not completely true, but you get the picture. All of these companies are so cheap right now, not because their fundamentals have changed or their long-term outlooks have changed or because they are bad companies. They're down because of outside circumstances, because of the virus, okay? Everybody's getting hit by this. The economy's getting hit by it. It's not these companies' fault. And since I invest in a company, I don't just buy a stock. That doesn't matter to me. The fact that they're going down right now, I still believe in the company, and when things start to turn around, I believe these companies will do better than they had ever done before. So just make sure to ask yourself, will you be able to stick it out when times are tough? Will you be able to resist the fear that will come when you see the portfolio going down, and will you be able to resist selling? Because that is when you will lose money. If you are emotional and if you are that emotionally attached to your money, that's when you will most likely lose. Now, there are times to sell stocks. Sometimes their fundamentals do change or they come into a big lawsuit. It's not that you should never ever sell a stock, but the majority of the time you shouldn't. Number 3, do you understand how the company you're thinking about investing in operates? Like, do you know what sector they're in? Do you know how they've done in the past? Do you know how they're expected to do in the future? Do you know what their plans are going forwards? You need to have a good understanding of the company you're investing in. And this is where the research side of things comes into it. You can't just blindly invest in someone and hope for the best. You need to really understand the company and their fundamentals. We touched on the fact that we want to invest in companies that we believe will grow in the coming decades. And how are you supposed to do that if you don't understand how a company works? You know what I mean? So it really is so important that you don't just blindly choose companies that other people are choosing or that there is some hype behind. You need to truly believe in them. Let's just really quickly talk about Facebook. So we all obviously know that Facebook owns the social media platform Facebook, but they also own Instagram, WhatsApp, and loads of other billion-dollar and multi-million-dollar companies. So if you're investing in the Facebook stock, you're not just investing in that one social media platform, you're investing in all of their businesses. And because of that, you need to make sure that you believe in all of their businesses before investing in them. Okay, so you need to do the research, see what they actually own, see what they actually do, not just the fact that they have one social media company, because that's not the way it works. So you need to make sure you have a full understanding of the business. It's important to know how much money a company is making, their earnings per share, their past balance sheets, and everything along those lines. That's all really, really important. But what I personally think is more important when it comes to a long-term investor's point of view is what the company actually does. Like, are they likable? Do they have good management? Do people understand them? Do people believe in them? Because that is what's going to really make a company grow. Obviously, they need to have the cash sheets and the cash and everything to back it up, but you need to believe in them as a company first and foremost. Number 4, and it's an important one, and is one that people that I'm speaking to don't really seem to be taking into account, and that is to diversify. Don't put all of your eggs in one basket. Don't just buy one stock that you really heavily believe in, because what happens if they do poorly? You lose everything. Delta is a good example right now. They are one company that so many people are excited about because they've been hit so hard, and the odds of them disappearing off the face of the earth are so low. But nobody knows what's going to happen. At the end of the day, there is always a potential for them to go bankrupt and you could lose all of your invested money. And that is why it's so important to diversify, to invest in different companies in different sectors. For example, if you were only invested in oil companies right now, you're having a horrible time because out of nowhere, oil prices dropped like crazy because of Saudi Arabia. Whereas if you're invested in oil companies, you have some consumer staples, consumer discretionary, you have some utilities, you've a very nicely diversified portfolio. You're not doing as badly as somebody who is just in the oil industries. There are 11 main sectors when it comes to investing, and you don't have to be involved in them all. Again, you have to understand what you're investing in, but you don't just want to be in one or two of them. You want to be as widely diversified as possible so that when the market is doing well or poorly, you are doing well or poorly. It's not all dependent on how one sector inside a broader market is doing. I personally am currently invested in over 20 companies and plan on being invested in far, far more than that as the months and years go on. But that just means that if one sector or one company does particularly poorly, then I'm okay. You know what I mean? That's not all of my money tied up in that one particular company or sector. For example, I own some oil related stocks and they got hit disgustingly hard, and that's fine because I have certain stocks that are actually in the green right now, and they kind of balance each other out to an extent, you know what I mean? So just make sure to diversify, please. And the last one I'm going to speak about today, which is extremely important, is understand how much money you can actually potentially make. People get so excited with stocks because they see that some people, very, very few people, make disgustingly large amounts of money. Some people have made hundreds of percent in one day, and that is not what is expected as a long-term investor. That is not what we hope for. After adjusting for inflation and dividends, historically, the stock market has paid back an average of 7% per year. Now, very rarely do you actually get 7% per year. Sometimes it's going to be 20%, sometimes it's going to be minus 40%, but historically, on average, it goes up 7%. So that is also why being in the market for a long time is important, because you could be in it for one bad year and lose 70%, okay? Or you could be in it for one good year and make 60%. Now, those numbers don't really exist or ever happen, but you get the picture I'm trying to paint. But if you're in it for, say, 20 years, there's some really good ones, some really bad ones, some okay ones, you can expect an average of 7% increase. And what this means for you is that it means, say, for example, you put 10,000 euro into the market. In approximately 10 and a half years, that 10,000 euro will become 20,000 euro. In 28 years, it'll be about 38,000 euro. In 50 years, it'll be worth almost 300,000 euro. Now, this is with making any additional investments even. This is just one, this is what 10,000 euro turned into, okay? Nothing else added in. Think about that. It's crazy. It is crazy numbers. And think about what happens if you keep investing on a weekly and monthly basis and always opening more and more positions. We shouldn't be expecting to get rich quick in the stock market. We should be expecting to get rich consistently over a really long period of time. And just remember again that 7% is an average number. Very, very rarely will you actually see that year to year. They are just some of the most important things I think are worth considering when you're thinking about getting into the market, because obviously it's really exciting and you're seeing people like me getting into the market and putting their money in there and we're all having a great time. But there are so many risks involved and you can lose all of your money. Nobody knows what's going to happen. So just make sure you're informed and that you actually understand what you're investing in. And especially that if you're looking to somebody like me for advice, I don't plan on touching this money for decades and decades to come. If you have any questions, just drop me a comment below. I'll answer every single one of them, no problem at all. Please like the video if you didn't, and please subscribe if you're new. The channel is flying it lately. I appreciate everything that you're all doing for me so much. But yeah guys, hopefully you did enjoy. Until the next one, peace.